A lot of classical trend lines. I try to limit how many different techniques and different things. I do use moving averages. Fibonacci retraces are really, really helpful as well. And you're right. Basically what we saw here, for instance, there was a little bit of a bullish pattern that took us up, right? So, just looking at what we call a micro pattern, there was a micro move up, and then this is what's called a bullish bull flag. And you could see that it was a very short-lived bull flag as it took us right into the Federal Reserve. And then we saw a reversal. And what you don't like to see is a reversal that then negates the low of the previous bullish pattern. And that's what we have now. So, you could argue again that now we're making this almost inverse pattern here, which potentially sets us up to retest that 15,700 level. Couple things that I've kind of been playing with, and I'm a stock market guy by trade. That's how I grew up. I started again in the late 90s. Crypto wasn't around until 2009. But one of the things that I've been playing around with is comparing the FTX collapse and its impact on the industry to the Lehman Brothers collapse in 2008. And I think that's really interesting in terms of the fear. And remember, when you're trading charts, you're trading human emotion, right? When someone buys, they're greedy, they think it's going up. When someone sells, they're fearful, they think the price is going to go down. So really, you can compare different charts, different time periods, historical charts to what's going on because it tends to repeat over and over again. So if you look at that, Bitcoin, or at least the S&P 500 after Lehman Brothers, dropped another 45%, and it took about 6 months. So for me, in terms of where Bitcoin could bottom in 2023, I'm looking at 6 months out from the FTX drop, which is right around May to June. And then also we're looking at, right around that 10,000-ish area, potentially, maybe a little bit below in terms of Bitcoin. I also think that with Bitcoin, the 10,000 will be a max pain. And Scott, I know you know about this stuff in terms of, where do you force the most fear out of people? And it probably would be around that 10,000 break. I think what you're speaking my language in terms of, if you look at the stock market, and the stock market's now been in a bear market since basically the start of 2022, and you've had these, in bear markets, you tend to get what's called rip your face off rallies, right? Where you have these mega sized reversals that make people think the low is in. And we really haven't seen that. If you look at Bitcoin, like the biggest rally we had was this right here, and you haven't seen that. So I agree with you that in a weird way, you'd almost expect it to catch people off guard and kind of rip up to 20 or 30 before that next leg potentially lower. I'm in the camp that I think at some point in 2023, and it could be a contagion even from the stock market. I'm actually very bearish on the stock market. I think we're heading into a recession. And so I think prices in stocks will go a lot lower. And I almost think that that's going to be the kicker for why Bitcoin declines up into a point. I think that once we get some regulation in the space, which really regulation is code for transparency for all us retail investors. We need transparency now. And I think once we get that, then you're going to start to attract big money. If there's one thing I realize, and you can see it with the big money that was invested in FTX, big money is now 100% on the sidelines. I'm not seeing any movement in the hedge fund industry to invest in crypto until there's transparency, because they have this fiduciary responsibility to safeguard funds, and there's just no clarity now. Absolutely. And again, for me, it's, and just to be clear, and I'm big on transparency. What I've been doing in terms of my personal investments is I basically decided that when we were in that 17-ish thousand range, that I would start accumulating a little bit of a longer term HODL position in Bitcoin. But what I did before I started to do that, I took a certain amount of money. I said, this is what I feel comfortable based on my net worth, et cetera, for putting in Bitcoin. And I divided it into 6 portions, equal portions. And I took that first 1/6, and I put it in around 17 and change. And then the idea is every 3,000 down, I'll just add another 1/6 until I accumulate. This way, I'm not trying to be a fancy trader here and pick the exact bottom, because honestly, I'd probably miss it. But at least I have exposure on the way down if it does start to rip higher. Now, looking at Ethereum, for instance, one of the things you were talking about is, what is the max pain? Could it be to the upside? And the one thing I'm watching here, right, is this trend line right here, this downsloping one. I saw you had it on Bitcoin. It's basically the same sort of thing. And notice how you have this little mini bull flag right here. All right, now we are backing off. Stock market is down today again. But if we could break this level, I would say around 1,235, 1,240, you actually have the potential to retest this high and maybe even get to a longer term trend line. Let me erase this one. This would be a longer term up move.
17-ish or something.
Yeah, back to about 1450 to 1500. So I think that's kind of interesting there in terms of maybe we get a short term move up before that next flush to the downside. So a couple things that I'm watching here on it, right? So, and that's a great point because there's, let's say I only have a tiny position and it goes up. And so you can see here, this longer term trend line on Bitcoin did break through it. So I'm looking at this one here. All right, this kind of one connecting this high. And essentially, if we were to make a strong move up, right? So essentially, this is your big drop on FTX, and that now becomes my zone. All right. So if we were to rally up, let's say we break above that level, and let's just say we do go to 25,000. What I then look to do is I have to admit that this bigger bearish pattern has now failed. And what I would do is I would look to buy what we call a retrace to the scene of the crime, which is basically the retrace. And so once something breaks out,
I'm never resistance to support. Right.
Exactly. I'm never one to chase. Like, chasing is the cardinal sin in investing and trading. What you'll do is you always get pullbacks. You just have to know what levels will now be support, and they are former resistance levels. So for instance, I would then start to pick some up right in this range if we can take out. And I think the FTX high that's now the level to beat, as in terms of charting. Like, that is a psychological point where if we could break through that, now you're talking about potential further upside. The move, I mean, let's just say we do break above this area. All right. So you have two options, and one would be obviously a retrace to this FTX high, same kind of thing right there. The other one would be this one back here, which I actually kind of would favor because it's a longer term trend line, where same kind of thing. If you get the big breakout here, let's say all of a sudden we do get some regulation that potentially is positive for crypto in terms of transparency, it causes a price spike, then I would look to buy the pullback back to that level. So you're looking to buy, 1400-ish area, 1450 on that trend line retrace. It's kind of an intriguing one here. Now part of the positives, I mean, there's positives and negatives. The negative is basically right now we're at this key level here, where if we look at the low from basically the drop with FTX, we heard that FTX held a ton of Solana, and obviously that caused a big price drop. Since then, it's actually held up amazingly well, but this is the game time level, right? You would prefer not to see a close below this 1090-ish level. Currently, it is below there, but we need to see, does it stay below, or by day's end, does it recapture that line? If it recaptures, this would be a very easy trade for someone to take as a trader, where you would say, okay, as long as it doesn't close below 1090, I go long. If it closes below 1090, I stop out for what, a 5, 10, 15 cent loss. But the upside could potentially be quite a bit. I mean, you could be looking at a move back to 14, 15 bucks in the near term. So, we always look at risk versus reward. And again, it's going to be dependent. I wouldn't enter this until I see where today closes, and I'd want to see it close back really above 1090, 1095. But that would be an interesting little short-term trade on Solana if double bottom does hold here.